Welcome to Morningstar. Comgest Growth Europe won the Morningstar Award for Investing Excellence 2022 within the Europe Equity Fund category. Today I'm joined by Alistair Wittet, European Equities Portfolio Manager at Comgest. Thank you, Alistair, and congratulations.
Thank you very much. Good morning.
So, to what do you attribute your fund's success in 2021?
Yes, I'd point to maybe a couple of factors that have been important to the performance of the fund in 2021. The first and by far the most important are the fundamentals. 2021 was a very strong year for the fundamentals of the companies held in the portfolio. And there are a couple of reasons for that. The first is what we believe is an acceleration of fundamentals related to the crisis. The crisis, we believe we're exiting this crisis in a K-shaped manner. And that means, on the one hand, markets that are accelerating, whether we think of IT spending, benefiting companies in the software space, benefiting companies that install that software, companies like Accenture, and benefiting, of course, a company like ASML, who are involved with the manufacturing of the chips on which that software runs. So acceleration in IT spending has benefited a large portion of the portfolio. We've also seen within sectors the strong getting stronger. Take, for example, the luxury goods space, where companies or brands like Louis Vuitton and Hermès are recording sales substantially above their 2019 levels in a market which is much more subdued. So we believe the crisis has accelerated the fundamentals for the stronger companies that came into the crisis and are now exiting it in a better shape. We also believe that innovation has been an important driver, and it consistently is a driver for our portfolio, and 2021 was no different. Our largest position today in the portfolio, Novo Nordisk, got approval for an anti-obesity product that they launched in the US, and we believe that the growth potential coming from this product are substantial, and that led to a strong re-rating of the shares last year. So fundamentals on the one hand, a very important driver of performance. On the other hand, those fundamentals have been rated more highly by the markets. In other words, there has been a slight re-rating of quality and of growth in particular in 2021. And that, of course, was a second driver of performance.
Right. Let's now look at what is going on in Ukraine. The Russian invasion has led to a humanitarian tragedy, of course, and caused the financial markets to collapse. Now we're also facing the threat of stagflation with the peaking commodities prices. How have you reacted in terms of asset allocation in your portfolio, if you have? And more broadly, how does this situation change your investment strategy?
Yeah, so the portfolio is built by design to be defensive. We are quality growth investors, and a very important part of quality is that these companies have defensive moats that protect themselves against external factors like what we're seeing today. Now, what do I mean by that? They can be companies that sell products that are non-discretionary. Of course, that's very prevalent in the healthcare space. They could sell products with a revenue model that is recurring. So in the software space, we pay annual licenses or maintenance fees to continue operating our software. That creates a defensive revenue profile for these companies. And then finally, pricing power. In the consumer space, companies with the best pricing power can offset the currency devaluations that we're seeing today, or the other inflation impacts that they're seeing. So defensiveness against these external factors is a really important built by design or built into the portfolio when we think about quality. And a great demonstration of that in the consumer space is just take a look at the full year transcripts and count the number of times that companies talk about inflation, input cost pressures, or supply chain issues. And you'll find that the best quality companies like Hermès and L'Oréal, mention it only a few times, because in reality, it's not a big concern for them. Weaker brands in Europe, you'll have seen probably something up to 50 mentions of it on the conference call. This is a real issue for them. So a demonstration there, if you like, of those defensive moats protecting the companies against these factors. But that is not to say that we haven't done anything. And since the crisis unfolded, we have started to take advantage of share price weakness to continue to build position in some of our longer term high conviction names that we can now buy at a lower price.
Thank you so much, Alistair, and congratulations again for winning this award.
Thank you very much.